So I think that we can start just to keep the program on time. Welcome everybody. Good evening. My name is Claudio Tesone. I am the chairman of the Blockchain Center, and it is for me a pleasure to welcome you all to the lecture series of this autumn 2020. That, as the situation is, we are also having online, like the one in the past semester. Just for your information, this lecture is being recorded. Therefore, if you are not happy with it, perhaps you can turn off your cameras, but always, if you are fine with it, it would be very good to see your faces and have some sense of social environment in these strange times. As I said, it is my pleasure to welcome you to the autumn edition of the lecture series that we, as Blockchain Center of the University of Zurich, co-organize with Trust Square and the Centrum. So my deepest thanks to Frederick, to Malik, to Shengnan, who have been helping in the organization of these events. As you may recall, the Blockchain Center of the University of Zurich is an interdisciplinary center that focuses on blockchain, but not purely from a technical point of view, but also including economics and law and regulation as part of its pillars in terms of research. And this is also the spirit, and also something shared with the Centrum and Trust Square, that we want to have not only talks about specific aspects of protocols of the technology, but also we want to learn about other possible applications or different views. And this is how we construct the program of the lecture series. So I'm going to introduce later Professor Sandner from the Frankfurt School Blockchain Center. But before that, let me give you a few words about the program of this year. The program you can see in these slides that I am sharing with you now. On the 1st of December, just to tell you, the next presentation, the next lecture will be given by Dr. Moser from the Swiss National Bank on central bank digital currencies. And the lecture of today is somehow related. This autumn semester is going to be opened by Professor Sandner, as I said, who is at the Frankfurt School for Finance and Management. He was ranked in 2018 one of the top 30 economists by FATS, by the Frankfurter Allgemeine Zeitung, and he also belongs to the top 40 under 40, which is a ranking by the German business magazine Capital. The expertise of Professor Sandner in particular includes blockchain technologies, crypto assets, distributed ledger technologies, Euro ledger, that is exactly the topic of his presentation today, ICOs, security tokens. The list is very long, so that's why we are so happy that he's presenting and opening this lecture series. He is also a founding member of the German Blockchain Association, the International Token Standardization Association, and also the Multi-Chain Asset Managers Association. So it is for me a pleasure to give Philippe the virtual stage and let him start his presentation today.
Excellent. I hope you can hear me. Maybe some of you guys can nod or blink with their eyes. Okay, I see. Okay, this then.
From my side, I can hear you perfectly.
Excellent. Somebody needs to grant me the permission to share my slides.
Yes, I think that you should have the right to do so.
Okay. And then I can start immediately. So now it works. Give me 1 second. And now you should also see the slides.
We do see the slide, yes. Thank you very much.
Excellent. Yes, thank you very much, Claudio. I know your name since a couple of years, but we haven't met each other, right? There are not that many people out there who are teaching blockchain stuff since years. We have a couple in Germany, then there is you and a few others in Switzerland. and Liechtenstein, there are a couple, but there is also this kind of development that we are just starting with blockchain technology also at universities. Yeah, we are, I would say so, some front runners. We are just starting here, but there is no university board decision out there saying that we are now educating people on blockchain, right? So it's all bottom up so far. It's not top down yet, but I think we will very, very soon also have more threads out there. Yes, and thank you very much for the chance to quickly present my topic here. I would like to focus on tokenization of crypto assets, and also because it's really a rising topic on the digital programmable euro. Yeah, I'm the head of the Frankfurt School Blockchain Center. You might not know the Frankfurt School. It's a small university. We just have 3 small faculties. We are focusing on business, economics, computer science, and also a little bit of law. But therefore, we are extremely focused, and we are therefore also quite small. We are a privately financed university, and this smallness, so to say, also allows us to be quite speedy. That's, I think, why we could move quite quickly, setting up these blockchain centers 4 years ago, whereas other universities, which are huge, very often do not have such agility. But University of Zurich is an exception, actually, because this has been proven. But in Germany, I feel sometimes that large organizations have some difficulties with adopting blockchain for products, processes, payment, or also for education. We have 14 employees at this point of time. We are doing, of course, conferences, education and stuff. We are also doing consulting projects, startup incubation and so on. So we are trying to be something like a Fraunhofer Institute in Germany for the financial area. We are not a Fraunhofer Institute, but we are something like a Fraunhofer Institute for the financial area. Mostly what we are doing is related to finance, and what we are doing mostly occurs in 3 dimensions. First is crypto assets, primarily Bitcoin and Ethereum, then the digital programmable euro, and digital securities, potentially also tokenization. That's it. We are not focusing on much more, but luckily from the area of the digital programmable euro, you can easily jump into other domains such as manufacturing, industry 4.0, and so on. I will explain this in the lecture from now on. So let's directly jump into the topic. I think what's interesting to note is whether regulation is basically stifling growth, or whether the exact opposite is occurring, that regulation, if done properly and also right in time, then it can be a solid basis for growth, right? So in case regulation is happening as early as possible in a solid way, then companies are reducing their uncertainty. They can then invest into new products and businesses, and then they would grow. And therefore, we can see here very interestingly in the blockchain area that especially Switzerland, but also, of course, Liechtenstein, and also, by the way, Germany, is doing good regulation for the blockchain space, which then provides a positive sentiment. And we see it now with digital securities. We really see an increasing dynamic in Frankfurt, which has been initiated initially by the law proposal, which is a couple of months old, and also by the other crypto law, which is already for Germany in February. So in my mind, these are the typical 3-4 domains which are now evolving interestingly in a differentiated way. So 2-3 years ago, it was all about Bitcoin and crypto, of course, and a couple of prototypes. And now we see that blockchain is strongly differentiating from the origins of Bitcoin. So we have traditional crypto assets as one domain, which is very dynamically evolving these days. We just had, by the way, an all-time high for the market cap of Bitcoin, not for Bitcoin price, by the way, but there are more Bitcoins out there. But in terms of market cap, we had an all-time high 1 or 2 hours ago, which is fascinating. So traditional crypto assets are one domain, primarily Bitcoin and Ethereum. Then another huge domain, which is now popping up in Germany, is called dematerialized securities. That's basically stocks, bonds, and all kinds of financial instruments on blockchain basis. Then also triggered in Germany by the German National Bank, but you have the same in Switzerland, by the way, the national currency on a blockchain basis. And this is now triggered also by positive regulation. We had the crypto license, which came into force in January. That's basically meant as a perfect, solid fundament for custody business. Germany is one of the very few countries really giving like a very, very strong footprint on custody. People are questioning why this is. And one reason is that they do not want any risk of hackers, which like intrude the technology. Therefore, it needs to be regulated. Only a couple of companies will get the license. Plus, it is also a tax thing, right? Germany is a high tax country, and you would like to have all contracts with German citizens being run by a German-based subsidiary. And everybody knows Coinbase, I guess. Coinbase has now set up a subsidiary in Germany, and they are right now in the process of moving all contracts with German citizens from the US to Germany, because it's basically required by the law. So it's multiple reasons why Germany is putting this focus on it. One reason is taxes. And this will then lead to the situation that I would expect in 2-3 weeks from now on, we will know the first 10 or 15 companies which will have this crypto license, but vice versa, this will force other crypto exchanges, crypto custody providers, and so on, to stop their business by December. Yeah, that's really like a very, very tough thing which is happening. Very often people do not know what's happening here, but if you, but like theoretically, exchanges from China and from elsewhere, which are operating also in the German market, they have to stop their business very soon in Germany in case they are not taking legal action and trying to get this kind of license. And we will hear the first 10, maybe 15, maybe 20 company names which will get the last license by the German FMA, by the BaFin, in a couple of weeks, probably before 1st December. Then we also had now a proposal for a law for digital securities. I will go into detail here. Securities in Germany has been paper-based since hundreds of years, right? And now it's the first time in history that Germany is thinking of really systematically banning the paper-based documents and therefore dematerializing securities. This will first be done with bonds, that's basically debt instruments, and potentially later on equity instruments and also funds will also be included, but it will take probably another year. This also is interesting because then with the new law, which will probably come into force in Q1 next year, issuers of financial instruments can also potentially run their own register for securities, right? Right now, everything is running via centralized structures, for example, Deutsche Börse with their subsidiary Clearstream. But in the future, it could be possible that for example, an industrial company, say Daimler or Bosch, they are with their financial department creating an own register to maintain like a register for the securities. It would be possible. And already now we see 2-3 large-scale financial organizations in Germany who are thinking about trying to move in this field and potentially making competition for Deutsche Börse, which is in specific fields a monopoly. This will lead to a competition among securities register, in particular Clearstream and so on. But the law does not allow competition right away. The law says we do not change the architecture of the financial markets on the short term, but we are digitally transforming it. So no monopoly is taken away, no competition is being made. So it's digital transformation of existing business, right? But we are also opening up the financial area for fintech startups who potentially could create their own register for maintaining securities. That's basically for potential security token exchanges and so on. So the financial sector is basically being digitally disrupted in a small sector, but it's digitally transformed in the large area with Deutsche Börse and Clearstream in the middle. And also potentially you would then have traditional German capital market formats, say debt instruments and equity instruments, things like this, which are out there since hundreds of years. They would potentially be running and listed on the smart contract platform such as Ethereum or Stellar. That's potentially, right? It needs to be discussed, but it's fascinating to then have like a very boring German debt capital instrument, which is out there since hundreds of years, suddenly being deployed on Ethereum as a smart contract. You know, this is really groundbreaking, and very often people are still in the process of understanding that this is the early stage of disruption of the capital market without disturbing too much of the existing business to keep financial stability, which in my personal opinion makes very much sense. Okay, that was the proposal for digital securities, which will come into force probably in Q1 next year. And then, which is also fascinatingly, we have the MiCA regulation coming up. This has been a proposal by the European Commission a couple of weeks ago, and this will affect to some degree the euro on blockchain. It will affect traditional crypto assets, Bitcoin, Ethereum, and primarily also private stablecoins such as Facebook's project Libra, for example. MiCA is fascinating because it would apply quite early, as early as probably 2022, to all EU citizens. Yeah? And this is 450 million people, all regulated by one single regulation scheme, which is called MiCA, without relying on national solutions, which is now the place, for example, in the area of securities law. So with this, MiCA is really, really, really a good move by the European Commission. It's not perfect actually, but it's good. And it's also, it will have a massive impact because it will be applicable to 450 million people. That's the entire EU. So what is it? What you see here is basically in gray, all crypto assets covered by the MiCA. Crypto assets is in catch-all category. And as soon as something is related to crypto and has an issuer in the future, it should be in this catch-all category of crypto assets. This is differentiated from security tokens. You could call them digital securities because you see here that these boxes are not overlapping, right? That's important because security tokens are regulated by digital securities law, which is a different body of law than the MiCA in the future. So what the European Commission is doing here is saying crypto assets are not financial instruments. That's why you see two boxes here and not one. And of course, that's fascinating that the MiCA regime is regulating a market which is very, very, very tiny right now. It totals to 450 billion US dollar right now, but the security token area is totaling to hundreds of dozens of trillions of assets, right? So the crypto assets area is really tiny in comparison to the digital security area, and still, despite being so tiny, the European Commission took the effort of producing a regulative proposal, which is having 170 pages, and this is just the beginning, right? Of course, that's much to read, but it also creates certainty for all kinds of players in the European Union, and therefore the impact of MiCA will be really, really a large one, really significant. So to provide some examples, you have Bitcoin and Ethereum on the left-hand side, shares and bonds, for example, on the right-hand side. Then we have the euro in the form of e-money already without blockchain technology. This is the share of the rectangle which is outside the dark gray area. And we will have e-money, that's the euro on top of blockchain, which is basically then which needs to be in compliance with the MiCA regulation. And this will then be called EMT token, e-money token. And that's very, very important for the discussions in the next month. Once a token is not referenced to the euro, yeah, so it could be a basket of assets or it could be gold or something else, then it's not an e-money token anymore. It's not the euro on blockchain anymore. Then it would be the so-called asset reference token, the so-called RRT token, right? And in case these tokens are getting significantly large, such that their importance is really increasing, the European Commission proposes to have a subcategory which is called significant e-money token or significant asset reference tokens. This is specifically done for Libra to get Libra under control, while at the same time not stifling smaller innovative projects. So what you see here is specific rules for very, very systemically relevant projects. That's basically the MiCA regime with the silos. And interestingly, for those of you who might know the Liechtenstein Token Act, you see that the Liechtenstein Token Act is compatible with this because it's blockchain underlying, and blockchain rules, that's the MiCA rules, are combined with e-money rules. Yeah. Why? Because you plug the euro into a token such that you need token rules and the euro rules. That's basically why there are like a couple of similarities between the Liechtenstein Token Act and the MiCA regime. But of course, the Liechtenstein blockchain regulation is much arranging in a much more broader way in comparison to the to Europe. Therefore, Liechtenstein only has 38,000 inhabitants. The EU has 450 million. So therefore, they were limited, of course, but it's good. And you have utility tokens down there, which are also having a specific regulation scheme. For entrepreneurs, the following is important. For EMT and ART tokens, you have to get approval by regulatory bodies. But utility tokens, you do not have to have approval by regulatory bodies. You have to comply with the rules, but then you can basically create your white paper, you can launch the token, and you do not need to have to wait for regulatory approval, as is the case with the stable coins in form of EMT and ART tokens, right? So we see here what's happening. The European Commission started at least 1 year ago with setting this up, and therefore one very important trend is not included here. That's decentralized finance, by the way. Decentralized finance is so dynamically happening that they could not consider it there. But my assumption would be that DeFi must fall in the crypto assets category. The problem is that DeFi instruments very often do not have an issuer, and the crypto assets category here assumes that any asset is having an issuer, right? So this creates some friction. This will be sorted out. But somehow DeFi instruments also fit in there to some degree, right? So what's happening now is that we are regulating this entire space for hundreds of millions of people, but not much happens yet. Let's compare this to the smartphones, right? With smartphones, we had exactly 0% market coverage back in 2004. At that time, nobody here in the room had a smartphone. I also didn't have a smartphone. It just wasn't there yet. And now, 15 years later, 2020, everybody is having a smartphone. Now we're having reached a market share or market diffusion of 100%. So it took us 15 years to go from 0 to 100%. And behind this small curve here, there are dozens of billions of devices being sold to any country in the world. So that's a massive trend which has happened in 15 years. And I think if you now try to compare where blockchain is, we are right here where now the curve is first of time trying to move a little bit away from the x-axis, right? And now moving towards the 100%. And it will probably take 15 years or 20 years to go from 0 to 100. And we are right now, in my mind, getting this dynamic. You see it with the Bitcoin price, and it will be fascinating 5 or 10 or 15 years ahead of us, because we will see the uprise of this entire technology. And in my mind, we also will see an uprise of crypto assets, including Bitcoin and Ethereum. It's just starting right now. That's why in my mind, it makes very much sense for companies, large-scale corporations, but also startups and also individuals to now tap into this technology, to do projects, to invest time, to get to know the technology, to get to know the people, because now you can jump on this bandwagon, which is now basically a train leaving the station in my mind. It's really fascinating to see this these days, and it will go until 2035. That would be my expectation now. What is 100%, by the way? 100% would be any asset being somehow denoted on blockchain systems. This includes national currencies, euro, Swiss franc, and so on. It includes bonds, stocks, funds. It also includes other ownership stakes, for example, the car register, potentially the real estate register, then crypto assets, and so on. So everywhere where there is value embedded somewhere could potentially be a candidate to run on a DLT system in 20 years. That would be my expectation. And therefore, it's fascinating to see Switzerland, but Germany and also the European Commission to set out and propose rules to take away the uncertainty for companies such that they can invest now and can benefit from this uprising trend. And therefore, I'm quite happy that, for example, Germany is really moving this topic quite largely in the EU in comparison to other countries in the EU. And my feeling would also be that, that the European Union right now is a little bit ahead of the US, by the way. US has a scattered financial capital market. The EU tries to unify it with the MiCA regime. But I also think that China is a little bit more ahead, depending on the topic, say 1 to 5 years. In case you are asked to explain blockchain technology, then my personal best word to explain blockchain is that it's a register technology. Blockchain, you can also explain blockchain with blocks and hashes and smart contracts and hash functions and all kinds of things, which make sense from a technology perspective, but from a conceptual perspective, I think the best word to explain blockchain technology is that it's a register technology, which also suggests that everything which is somehow organized by a register could potentially be run on a blockchain system, potentially at least, right? Now, in case you are storing assets in this register, then you have a capitalized register, and the register or the blockchain technology is there to organize this registry and to organize ownership on money and on assets, right? So who is basically owning what? That's basically the function for the register when you put basically money or other assets in it. And this is basically leveraged now by programmable money and tokenized assets, because programmable money is basically the form of smart contracts such that you can access this capitalized register by programming language in a very, very lean way. You have the function that the blockchain is basically creating a structure for ownership, and you have smart contracts which are with programming language accessing this ownership registry and basically manipulating it. And in my mind, therefore, this 0.2 in combination with 3 is extremely powerful and cannot be replicated in any way by any other technology. Existing capital market infrastructure works as follows. You have the money in the bank account, that's basically number 2. And then you have like large scale servers and data centers and IT infrastructures and APIs and all kinds of bridge solutions, gateways, and so on, to then be able to access the bank account through an API, for example, on behalf of a fintech startup, right? Of course, for the programmer, it's quite easy to use this API for accessing the money, but from a technology perspective, you have to really put like large scale systems in place to get the same functions as would be the case with a blockchain language or a blockchain system, which is allowing smart contracts for programming and tokenizing of other assets. And here, in my mind, Ethereum is by far the number 1, also having by far the most amount of people who are able to program the system. Plus, Ethereum has a standard setting scheme with the ERC format such that people can suggest a standard, and after lengthy discussions, the standard can come into force. No other DLT network right now is having this large community, the flexibility, already some kind of real world applications, and also this standard setting mechanism of ERC. And therefore, actually, in my mind right now, I do not believe yet in these so-called Ethereum killers, be it Tezos or EOS or this and that. For me, I would always vote for Ethereum because it has the broadest applicability and diffusion right now. But of course, we are monitoring the market and change our opinion if needed. But right now, Ethereum is by far the number 1, and no Ethereum killer so far has killed Ethereum. So to put regulation in a nutshell, at least from a German perspective, and the European Commission is taking a similar perspective, I would think that Switzerland is a little bit more progressive here. To summarize it, you can put it here. Securities are existing, they should run on blockchain, that's shown in dark blue. The euro exists, it should run on blockchain, that's also okay. Traditional crypto assets are new, but this is also okay within the boundaries of the law. You can do whatever you want to with it. That's, by the way, different in comparison to other countries like India and other countries where traditional cryptos are viewed very, very, very skeptical. But Germany and the European Commission do have some problems with so-called private stablecoins, in particular Libra. That's why the hurdles to get allowance by the government in form of the MiCA regulation is quite high with the so-called significant asset referenced token. Okay, now let's turn a little bit to the topic of the digital euro. Why does it make sense? So first of all, in case you would put the euro on a blockchain system, then you would be able to have much or cross-border payments at a higher efficiency. I think you know these examples. You could transfer the euro from here to South Korea, and the transaction would be finalized in a couple of seconds, right? From here to South Korea in a couple of seconds. This is not possible right now, and it would be possible, for example, with a digital programmable euro. Please also exchange euro by Swiss franc or by US dollar. That's always the same. Like these slides are now, you know, when I hold presentations in Germany, and Germany, we of course talk mostly of the euro. But you can, of course, exchange it. It's, Swiss National Bank is really advancing this field also quite dynamically. Reason number two why a digital euro makes sense is that you can program money flows, especially could then achieve automated payments and business processes. Examples for this are factoring, leasing, credit payments, consortium credits, escrow accounts, interest payments, all kinds of financial services out there. They could easily be programmed with small smart contracts being executed on top of a blockchain system. And why do we need it? Because a digital euro would then be able to be plugged into a smart contract, right? That's the build you should, that's the image you should have. And therefore that's a key point why, for example, the German industry is demanding it. With companies like Siemens, Bosch, Daimler, they would like to have the digital programmable euro to basically allow their devices, such as sensors, machines, vehicles, and so on, to execute payments denoted in euro through smart contracts. That's their vision for various reasons, and therefore you have to have the euro on a blockchain-based system. Reason number three means that's that's in my mind the most important reason, but it's difficult to really dig deep here. It means integration of delivery versus payment. This means you are putting an asset on a blockchain system and you are putting the euro on a blockchain system. You're putting on a blockchain system both assets, the euro and the asset. Why? Because then you can have atomic swaps. You can do trading by basically leveraging smart contracts, and you do not have to basically leave the silo to somewhere else because this is then much more easier possible. For example, having settlement processes running at a much higher rate. Give me 1 second.
And he vanished into his background. I hope all is well. I noted already a few questions that we can pose afterwards, I guess. Huh?
Yes, back here, I just had to close the door. Yeah, let me finish this slide and then we of course can do some slides. So integration of delivery payment means you have the euro and multiple assets on one and the same blockchain network, such that you can have atomic swaps just ran by the technology, and you do not have to rely on any organization and any financial intermediary to execute things which would be off-chain, right? That's one of the key points out there why the ideal system where the euro is running on a blockchain is not just having the euro on the system, but also allows other assets, other rights being tokenized. That's why reason number 4 is basically coming up next. The system should allow tokenization of rights and assets. And if this is the case, then the digital euro makes extremely much sense because then you can basically do accounting, settlement, allow consumption of services and so on right away just by like an escrow, like a smart contract, which would then be in place. In Germany, we have like lots of machinery companies, Siemens, Daimler, and so on, and they are forming the machine economy of the future. And in my mind, the digital programmable euro is best suited to allow devices, that's the Internet of Things, engage in payment processes. Yeah, that's basically the autonomous car, which is not just driving autonomously, it's also the autonomous car which is doing accounting and payment processes autonomously, right? That's the machine economy. It's, in my mind, the next step of the digital transformation of the industry. Some would call it Industry 4.0. And here you see very, very nicely that it does make sense to, for example, leverage blockchain technology for machines, especially because blockchain is the best technology to connect thousands or maybe millions of devices to a blockchain network, and they all can then start transacting money in form of the euro. Yeah, that's a huge domain here, machine economy and the digital programmable euro. And this is just starting now because people are now getting so far that they understand the huge potential for future business models. And number 6 is like a general reason why it does make sense. Higher degree of security and system resilience is also brought to us with DLT technology. China is much more ahead in this development. And the reason here is that China is having a different agenda. China wants to leverage the technology to increase the importance of their local currency, of the renminbi. And that's why they put so high emphasis on the technology, because they would like to leverage the technology to raise the importance of their currency. That's why they are, I would say, 4, 5, maybe 6 or 7 years ahead of us with regard to getting a national currency on top of a blockchain system. I think the future will be very, very interesting, especially in these domains here. That's traditional industry domains we have in Central Europe, say mobility, machinery, sensors, logistics, and so on. And on the other hand side, you have finance domains, for example, payment, leasing, securitization, factoring, and so on. And the most interesting business models from a blockchain perspective are those where the left-hand side is meeting the right-hand side. That's exactly where an industrial use case is meeting finance. One example is this. That's not an autonomous car, it's an autonomous truck. And this autonomous truck drives your goods from A to B when you pay it. And these days, right now, you would ask a logistics company to do it. In the future, you get in touch with this autonomous truck, which is having no truck driver anymore, right? And you're asking the truck, can you please transport my goods from A to B? And the truck would say, yes, I will do this. Please send me 10 euro. And the truck would then receive the digital programmable euro. Why? Because the truck is directly connected to a blockchain network such that it could monitor whether the money has been received or not. Yeah, so that what you see here in the future is an endpoint of a blockchain network. Why? Because the truck will be part of a blockchain network for payment reasons. What is here happening is that you are basically mixing up mobility and payment. Another example is this here that's related for sensors. The sensor is measuring data and it's storing the data, of course, and anybody who would get data from the sensor can get it, but only if he or she pays for the data. So in case you would like to get the data, then you would ask the sensor, I would like the measurement values from yesterday, and the sensor would respond to you via some kind of IT protocol. I can send you the data, it costs you 60 euro cent. And once I'm sending to the sensor 60 euro cent, the sensor would then reveal the data of yesterday. I could also order the data of last week or last year as I wish. So you would have here an autonomous small business model in form of a sensor, and you would basically combine a sensor with an escrow account, right? So wherever you are having industry domains meeting finance domains, in my mind, is an amazing field for future business models, startups, innovation, and so on. And by the way, this topic is largely undercovered at this point of time because industrial companies are staying on the left-hand side, finance companies are staying on the right-hand side, and the intersection is very often not really covered yet. This is something which still needs to be done in the next years. Yeah, one example here is this one. That's a real example which is going live next year, by the way. In the past, you have a tractor being sold to smaller cities, for example, a tractor costs, say, 90,000 euro, for example. Yeah, the tractor is being produced, sold to the city council, and the city council pays, and then transaction is over. And with blockchain technology, this is now remodeled starting next year, that you could have a pay-per-use tractor. This means that the tractor is basically not sold as a one-off product, but rather the tractor is driving around, and once the tractor is delivering a service, then it's being paid per use. And precisely what's happening here is that a tractor is very often used to basically put road grid on the street, for example, in the winter. And what the tractor will sell as of next year is that 1 kilometer with road grid plus insurance costs you €4.50. Yeah, so you are changing the business model of the tractor to a pay-per-use business model, and they will start doing this next year. What's happening here is fascinating because you are integrating the delivery of a service with the payment and with the accounting all integrated once. This means after 1 kilometer of driving and putting grid road on the street, the driver hits the button, delivery of the service is being stopped, payment is executed, the invoice is being sent, and all accounting processes are immediately being done, right? So there is, what is not required anymore is that an invoice is being sent out 2 weeks after, that money needs to be transferred 3 weeks after, that accounting needs to check whether money has been paid 4 weeks after, treasury is not required anymore, and so on. And why is this? Because the entire transaction in terms of delivery, payment, and accounting is finalized and executed right after the delivery of the service has been taken place. Yeah, that's basically what's happening here. And that's why they are interested in, and now with Corona crisis coming, city councils don't have money anyway, they would like to save their money. Now it's exactly like by incidence, the right time to launch such pay-per-use business models, because then the customer will pay, but even pay-per-use, and the manufacturer of the tractors is of course then able to sell the tractors. But it needs to be cross-financed by somebody. This is right now the tractor company, but in the future there could be special financing operations to finance the industrial goods, such as the tractor, for example. And yeah, give me a couple of minutes, then we can do a round of questions. This is what I'm now explained is basically the demand side of digital programmable euro. Why does it make sense from an industrial perspective, right? By the way, a digital programmable euro does not make much sense for private people like us. The digital programmable euro is nothing where we as retail people would have a benefit, right? The benefit is mostly there for cross-border payments. That's basically people receiving money in distant countries at lower transaction costs. And the benefit is there for all kinds of industrial processes, B2B operations, machine economy, and so on. That's exactly where the digital programmable euro makes extremely much sense, but that's something else than we with our Apple Pay cell phone. So now let's put this in a broader scope. We can also call it programmable euro, and the programmable euro could also be created by the central bank, right? The ECB could launch the digital euro, and very often we have the so-called retail CBDC being discussed. This is opposed to the wholesale CBDC, which is there for the interbank and security settlement market. But we typically talk about the retail CBDC. And here there is the direct model, which means that we as citizens would have a bank account with the ECB. Yeah, but that's just theoretically existing. Nobody would like to implement it at this point of time for various reasons. It's just a theoretical model. And there is the hybrid and the indirect model. This means the ECB would issue the euro. Existing banks and financial organizations, payment processors would take this euro and then basically distribute it to us in forms of online banking and so on. And most likely it will be exactly these hybrid or indirect models which will come to us once the European Central Bank is basically promoting this topic in a stronger sense. And besides the ECB, of course, private organizations can also issue money, especially such organizations which are regulated. What you see here in this field is the bank, this is PayPal, and this is all kinds of other companies which are issuing the money and providing the euro to us as human beings. In case we are doing online banking, we are also in this category because it's typically a bank which is commercial money, a bank which is providing a service and basically allowing us to monitor our bank account and so on. And then there will be money which is issued from unregulated entities in the future. That's, for example, Tether, Stasis, they are DAI by MakerDAO, and also the version 1.1, 1.0 of Libra. And you see here that these models are being pushed especially by China. China started already 6 years ago and now tests their CBDC system with close to 40 million people. Yeah, so Germany has 82 million citizens and China is testing their early system with 40 million people. And with this, I would say that the China is ahead of the ECB by at least 5 years, probably 6 to 8 years is the truth here. And the point is here that China is creating this kind of innovation top down, and they have a different agenda because they would like to raise the importance of their own currency. But that's not necessarily bad, because in Western countries, innovation typically is happening at the private sector, right? And that's exactly why in Germany, we will have solutions for the digital programmable euro as of next year, by 2021. Next year, this starts. It's a special version of the digital programmable euro. It's not like it's not involving the ECB in any way, but it still works, and it's absolutely sufficient for what the industry is demanding at this point of time. So the advancement which China has gotten is there when you compare China with the ECB, but it's not so strong when you compare China, which is what's happening at the private sector here in Europe, right? Then this distance of China is diminishing to some degree. Yeah? There are a couple of banks which are really pushing this topic of somehow getting the digital euro on a blockchain system, but on behalf of the bank and not on behalf of a central bank. And this is something I would like to explain now in a very quick way. In the current world, you have the SEPA account that's basically for storing the euro. And with this, the money is basically organized in bank accounts. Yeah? It allows you to have fiat denominated values and bank accounts. So how can you basically create a DLT system which is leveraging this? It's quite easy. You're having a DLT system and you build a trigger or a bridge solution between the DLT network and the existing payment infrastructure. This is here shown with the arrow. And then you can execute smart contracts on the DLT technology, which are then triggering euro payments in the legacy infrastructure. That's exactly where you can say that this is also the digital programmable euro. It's a boring digital programmable euro, but it does work. And this is a solution where at this point of time, 3 banks in Germany are working on these solutions, and it would be perfectly sufficient for Daimler, Siemens and other companies because these companies, they are also exploring this right now. And for them, it would not make sense to have better solutions of the digital programmable euro. That's an easy solution. It's compliant. It's also scalable to some degree. It also has some disadvantages, of course, but it's perfectly fine to get started as of next year. And you see here, by the way, the European Central Bank is not involved at all. Yeah, so it's a game for the commercial banks. With this, we would have programmable payments through smart contracts in euro notation as of next year. But then technology and development will progress such that we would also be able at some point of time to put the euro itself on a blockchain system. Then we would have programmable money. the euro would then be denoted in a token format, for example, on Ethereum or on other public systems, could also be permission systems. And then we would have the possibility to have a seamless change. That's basically seamless delivery versus payment settlement processes, which then also allows tokenization, which is the third feature of smart contracts. Yeah, so you see here, by the way, smart contracts, in my opinion, have three features. One is programming capabilities. Then the second feature is that money can have properties, right? That's, for example, white labeling addresses and so on. And tokenization and minting new tokens is the third feature of smart contracts. And then with tokens, you could then still have euro being moved around, but this will take a little bit more time. And of course, you also have other monetary units which are already in place now, which are also moved in tokens. And right now, as I said, we have to explore the upper route to get solutions for the industry. But the long-term goal, of course, is the lower route, which is then interacting with the euro in smart contracts, right? So this slide here is comparing legacy infrastructure with modern DLT-based infrastructure, with the assumption that we would like to execute smart contracts as a contract execution system. And then you have here these four variants which will come into force and launch to the market step by step. What I just have explained here is the euro, which is remaining in bank accounts. Yeah, that's basically what I call the bridge solution. This will be ready on the market next year, 2021. Then companies will be, or banks will be ready to launch an euro stable coin. Yeah, you could also call this an e-money token according to the MiCA regulation of the European Union. This would mean that the euro originally is running on a DLT system. So the euro is taken out of the bank accounts and now being plugged on a DLT system. And we can expect this to be happening as of 2022. Then we have a synthetic central bank digital currency. That's basically a special form of a central bank issued euro, which means that the ECB is issuing the euro and commercial banks are taking up this euro and basically distributing it, for example, under an e-money license to its customers. That's quite interesting and a very, very interesting solution, which is also promoted by the Swiss National Bank, as far as I know. And we can expect this solution to launch to the market in 2023. And now look at the gap. By 2026 or 2028, we could expect the European Central Bank to also have a solution ready, which would then be like the perfect CBDC, so to say. But being perfect, like creating such a project, takes a lot of time. Therefore, we will take a couple of years until the ECB will launch its solution to the market, if at all, by the way. And therefore, I would argue that these solutions 1 and 2 are much more important, because that's exactly the solutions where industrial companies can rely upon as of next year and the year after. And therefore, I think that's a very important message here. There is no the digital programmable euro. There will be multiple platforms on which the euro is running in the future. The earliest one solution will be the bridge or the trigger solution. Then there's the euro stablecoin solution. Then the S, the synthetic CBDC, and the true CBDC. And all these systems, they will not be replacing each other. All these systems, in my personal opinion, will exist and continue to exist for the next years or maybe decades, all in parallel, by the way. Yeah, so it will be very chaotic in terms of payment infrastructure. And to close this presentation, I have, I think, 5 more slides. I would like to finalize on tokenization and real assets, because this will also be strongly related to the digital programmable euro, but it's also developing independently of it. You might know the Liechtenstein Blockchain Act or the Liechtenstein Token Act, which is in my mind the absolute most fascinating law framework out there for blockchain technology. It says that, of course, you had Bitcoin as a first token out there, then you had utility tokens plugged on Ethereum, but you have to ask yourself, What is a utility, by the way? And the Liechtenstein Token Act is answering this quite nicely, because they say that a utility token is nothing else than taking a software license, which is a right, like a right to use a software, taking this right to use a software license and plugging this right into a token, and then a utility token results. So you're taking an existing right out there, which is existing since years, you're plugging this in a modern DLT style token, and then you can basically have the token with the right inside. That's why Liechtenstein has framed the term token container model. This means a token is nothing else than a container, and inside the container, you can package some kind of right. So a token is carrying a right, and with this, a token is nothing else than the digital representation of any right out there. And exactly the same way we have the software license, you could now take the euro, plug it into a token, then you have the euro on a blockchain system. You could also take like a stock or a bond, plug it into a token, and then you arrive at the term security token. Yeah? And this helps us to basically abstract the legal part on the left-hand side from the technical part of the containers on the right-hand side. So the container model in Liechtenstein is the key point of their entire law. And you can also explain it in a different way. For example, imagine there is this physical asset which is remaining in custody, and you would like to make it investable by all kinds of investors. What Liechtenstein focuses on is that it's not the diamond and not the asset which is mattering, but rather it's the right of ownership on this asset. So whoever controls the right of ownership on this asset is also indirectly controlling this asset right. It's about the right. And what Liechtenstein is now doing, they are taking this right, packaging this right into a container, into the token, such that on a DLT network, you can move this token around. And by moving token around, you are also moving around the right of ownership on the diamond, on the asset. And with this, we can now move the token from here, Germany, to South Korea in 2 seconds. And we have moved the ownership of the diamond from Germany to South Korea in 2 seconds, but the diamond or the asset didn't really move because it remains in custody in some kind of bank vault. But we have moved around the right of ownership. That's basically the key thought of the Liechtenstein Token Act, which is really, really, really fascinating. It sounds trivial, but it does make very much sense. And you also have first companies exploiting this. You have here the first company, which is basically and has announced that they have now created equity, that's tokenized shares of companies, putting them on a blockchain system. That's basically the first equity tokens being generated according to the Liechtenstein Blockchain Act. And I know these guys, they are also working on debt tokens, ownership tokens, and assets which are tokenized by multiple tokens. Yeah, imagine an asset which is tokenized by debt tokens and equity tokens at the same point of time. Yeah? So this is basically possible with their technology. And here's the proof on public Etherscan. You can have here like a look at their shareholders. They have 600 shares tokenized, and there is one shareholder having 200 and one shareholder having 400 shares. So this is basically the tokenized shares on top of Ethereum. And why will such tokenization approaches, especially according to the Liechtenstein Blockchain Act, be needed? For example, for real estate, right? Real estate creates a right for the owner. It creates right for the user, for the person renting it, and a lien right in case you would have to liquidate it, right? You now take these rights, package them into tokens such that they can run on blockchain-based system, and then you end up in the basic building blocks for business models of the future. For example, you're putting an insurance on the same blockchain network, then you have an integrated guarantee system. You could organize access rights to the real estate building and so on, but you have to have the euro on the blockchain system as well. Otherwise, these business models do not make so perfect sense. Same is true for this art piece, for example. This art piece is, of course, creating the right of ownership for the owner. Then there is an exhibition right, and there is the copyright of this art piece, right? You take these rights, package them into tokens, let them run on blockchain-based system, and you can control everything around this art piece with tokens. Now, for example, you can sell the art piece by selling the tokens. That's selling transactions. You can secure it. You can stake these tokens with somebody else to basically get money for it. Yeah, so that's basically getting a loan for putting the art piece at stake. You can make art investable, yeah, by basically taking this art piece, segmenting it into 10,000 pieces, such that any investor could invest 100 euro and get like a little share of this art piece. With this, the investor can also do portfolio management. You could also combine it with insurance solution, and you can control the transport chain of the art piece, right? And once again, you have to have the euro on a blockchain. Otherwise, many of these future business models do not make sense. Or you take this traditional or this classic car, again, right of ownership, usage right, you put them into tokens, and you arrive in business models of the next generation, allowing you to do leasing, car sharing, car rental, insurance, once again, car investments, especially because it's a classic car, and also theft control by basically combining the car with the DLT network. And again, you need the euro on a blockchain, otherwise it doesn't make so much sense. I think that's the last slide, I think. So right now, these days, we have bankable assets such as money, of course, certificates, bonds, stocks, gold, and so on. They will be running on blockchain also, yes, but more interesting will be those private assets, which in the future could be tokenized, for example, by putting a truck, a plane, a train, real estate, and all kinds of assets on a blockchain. Ownership can then be fractionalized such that fungibility of the asset is being created. You can make this asset tradable, and it increases efficiency, enhances trust, and reduces costs in case you're doing this in the right law regime, which is possible in Liechtenstein, and I think it's also possible in Switzerland. It's only possible in Germany to a very, very limited degree. And this is something where we go, and I think this trend is starting now these days with the first tokenization projects now currently being done. Yeah, and now that the Bitcoin price is rising, let's have a look. We can also finalize this session by finding out what's happening here. The Bitcoin price is now close to 18,000 US dollar. That's really massive, happening all on one day. And the question is now, where will Bitcoin head? That's the last slide, by the way, I'm pretty sure. So you see here Apple. When I created this slide, the Apple had a valuation of approximately 1 trillion. Gold had a capitalization of 8 trillion. Valuations have increased since then, right? Then you have US M2 money being valued with 14 trillion. So you have stock markets being valued with 75 trillions, and all money taken together worldwide, 90 trillions. And Bitcoin at that time just had 187 billion. And the question now is, what is basically the which kind of valuation does make sense for the Bitcoin in the future? And I really like this chart because it really clarifies the question, with what should we compare Bitcoin, by the way? That's the most important question. Should we compare Bitcoin with Apple as a company, or should we compare Bitcoin with gold, or should we compare Bitcoin with money or with stocks? Yeah, that's basically the question who needs to be answered. And I would argue that Bitcoin is most similar to gold. Yeah, very often Bitcoin is called digital gold, but Bitcoin is not very well known yet in comparison to gold. That's exactly why, if you do a comparison, I think Bitcoin needs to be compared to gold. And if you now make compute the relation 187 divided by 8, then you will come to a share of 1.7%, something like this. Or in other words, gold is factor 20 or factor 30 larger than Bitcoin when these numbers have been recorded, right? They are changing day by day. And the question now is this a fair relationship that gold is valued 20 to 30 times more than Bitcoin? Yeah, that's basically the question we have to answer. And in my mind, it makes sense for the moment, yes, but you could easily argue that gold should only be 10 times larger than Bitcoin, or maybe just 5 times larger. This needs to be sorted out. And if you then come to a conclusion with replying to this question, then you could come to basically like an expectation on the Bitcoin price, which does then perhaps make sense, right? But it's about the comparison. And we see here, Bitcoin is extremely small right now, and also all other digital assets are also extremely small right now. And therefore there is really some room to growth. And therefore I think we will have some absolutely fascinating years ahead. That's it. It took me a little bit longer, actually, sorry, but I hope there are still some people on the line. Yes, 34. And if you want to reach out to me, then here's my email address or my LinkedIn profile. So if you wish, you're welcome to contact me.
Thank you very much, Philip, for the very nice presentation. I think that everybody is clapping internally for the presentation. So the question, there are a few questions that already appeared in the channel. I think that exactly because of the structure in which you gave your final words, perhaps who can start asking the question is Sam, actually. The last question that he asked, that either he can speak for himself or I can read. Sam, be my guest.
Hi, I don't know if you can hear me.
We can, yes.
Okay, thank you. First of all, thank you, Philip, for the great presentation, and it creates a lot of clarity in this complex topic. The question that I have is, in your opinion, how a programmable euro would impact the value of cryptos like Bitcoin or Ethereum?
That's an interesting question. But I can only speculate, you know, everything what I said is just my opinion. You will ask other people, they will come to other conclusions, right? My expectation would be that Bitcoin and the euro are perfectly complementary, right? Why is this? Because Bitcoin has a stable supply and therefore a flexible price. That's why we see this large scale volatility. Yes, stable supply, flexible prices. And with the euro, it's exactly the opposite. We have a flexible supply. Yeah, that's why we see this increase of the money supply these days, with the goal of having stable prices, right? It's exactly the opposite. Therefore, you also today have gold in your vault or at the bank, and you have money on your bank account. Yeah, so there is not one replacing the other. It's more like that they are complementary, and therefore I do not see on the short term that Bitcoin would replace euro or something like that. That does make sense. But once we would go away from a fiat currency system to some kind of other monetary system where the money is being backed by scarce assets, as it was the case with gold in former times, then say in 10 years or in 15 years, it could make sense that Bitcoin could be purchased by central banks, and central banks are then backing their money by scarce assets, which could potentially not just be gold, but also could potentially be Bitcoin in 10 years. Yeah, that seems very speculative right now, but it could happen. Yes? The first central banks are now thinking of purchasing Bitcoin. It was the Iran central bank, as far as I know. And I could expect that in 2 years, we will have news out there saying that 2, 3, 4 other smaller central banks are also investigating whether they should purchase Bitcoin. Now, let's see. It's not out of thought.
Yeah, I think that just for the logical flow of the questions, Neuenschwander is good to continue. Okay, so I can ask the questions instead of you if you prefer then. Good. Okay. So the first question that he had was whether what you are presenting is the fact that CBDC will make private banks eventually obsolete.
That's also a good question. Actually, in my mind, a very, very clear no, because banks do fulfill a very important role in the capital market, especially onboarding customers, knowing their customers, having money laundering under control, and in case you have non-techie people, your parents or other people who might not be so techie, these people want to call somebody. They cannot call the ECB, and they also cannot call the blockchain. They need to have somebody to talk to. And therefore, I think banks and other organizations, they will definitely remain there. And their key function will be to provide, of course, advisory, yes, but also to provide a gateway into the blockchain world, right? So I deal with my bank via online banking, and the bank is then basically submitting transactions into the blockchain, for example. That I think this is happening quite likely. And therefore, I'm not a person saying that banks are being entirely replaced by blockchain technology, but I think banks are being compressed a little bit. They are a little bit being disintermediated. That means their headcount will shrink, more will be done by the technology, and their revenue will also shrink because the share of the value chain is basically shrinking for them. That's what I would expect, but still banks definitely will be there, and even more so, they do make sense as gateway in the technology. The same is true for notaries, by the way. In Germany, in case you would like to transact real estate, you're going to the notary, and then you're doing the transaction there. Notaries will not be replaced by the technology, but instead, the digital notary of the future will basically ask me if I would like to transfer the real estate to you. And then the notary would basically digitally sign the transaction in the blockchain system. So the notary will also be a gateway into the blockchain technology, which is maintaining the real estate register on chain. That's why I think banks will have tough problems in the next years, definitely, but they will not go away. But if I would work at a bank, then I would try to get into domains which are exposed to digital transformation. In case people are working at a bank and are not exposed to digital transformation, that's in my mind the direct way to unemployment.
I have a question. No, I think that Carlos' question, the last question of Carlos Cambayola, can switch perfectly on this point in the conversation.
Hi. So thank you for the great talk. And yeah, my question is basically, at some point at the end of the presentation, you referred to having shares of collectibles being distributed through a DLT.
Yes.
But the problem is that if you own a share of a collectible and the collectible is somewhere else, there is an entity which is keeping the collectible. And so you actually need to trust that entity. How does the DLT help in solving this problem?
Yeah, that's interesting because the DLT in my mind does not help at all. What you do need very often probably is a very strong government who is assuring with regulations awarded to the company that specific companies are able to keep on-chain tokens in perfect synchrony with off-chain assets. This in my mind can only be done by companies. And therefore, the Liechtenstein Token Act is really fascinating because they are creating a new regulation for licensed business for those companies who are keeping the off-chain world in synchrony with the tokens. This is called a physical validator. And in Liechtenstein, this will be a licensed business. So you have to apply for a FMR license there in case you would like to do it. And in my mind, it will be exactly these companies who are maintaining off-chain assets and on-chain tokens in a synchronic world. There is no other way in my mind.
Mm-hmm. Good. Thank you very much. Then there were a series of questions related to IoT, but I had a question before, which is, when you start having this series of digital versions of euro, you were mentioning the ones issued by commercial banks and so on and so forth. You were also mentioning that there are some firms that are posting information related to IoT devices, for example, that would like to receive micropayments in these kind of assets. And the question is, as of now, obviously there is no standard of which is the blockchain on which these companies end up putting this information. But you need the assets in that platform. So which is the ecosystem and how do you foresee that the decision process to accept some platforms to put these digital versions of real money inside is going to be taking place?
Yeah, that's a difficult question, actually. I think Ethereum has a good footprint for this. Mm-hmm. But once the situation clarifies a little bit and opens up, then very soon companies are investing a lot of money to build their permission networks. And mm-hmm. This will take probably 2 years, maybe 2 years to get them built. So this would then be end of 2022. And then the question is, how far then is Ethereum, right? If Ethereum is still being programmed day by day. So the question is, once large-scale companies are investing in permission networks and these permission networks are being live, how far has then Ethereum been developed in terms of standardization, privacy, transaction throughput, and so on? Because then it will be some kind of contest, what kind of architecture will be best. And I could imagine that that Ethereum does have like a large chance of remaining on the forefront because people are coding with Ethereum day by day. And the large scale companies, like be it IBM or banks, they haven't really started yet, right? They haven't really started yet. And Ethereum, you have thousands of people programming day by day, and companies are still very often stuck by doing PowerPoint charts, right? And this provides, in my mind, some kind of leap on behalf of Ethereum.
Mm-hmm. Good. Thank you very much, Philip. Sam had a second question now related, that was actually the first one that he posed related to this IoT world. So Sam, it was related to the latency.
Yes, thank you again, Claudio. Yeah, regarding your slide on industry and finance and how they will be interrelated. And you mentioned that the machines will be connected. So, I mean, the overarching word is IoT, so Internet of Things, connected to the blockchain. And my question is on latency. So the latency associated with billions of IoT devices on the blockchain would be tremendously high. And that's the question, whether you agree or not.
No, not necessarily. It really depends on the blockchain system, right? But nobody could now connect millions of devices to a blockchain system. You know, systems are not ready for this yet. But that's not necessarily bad because no company wants to connect millions of devices right now, right? No company out there is providing the budget to connect millions of devices to the blockchain yet. So it's a supply and demand game happening here, and the technology is not ready yet. So the supply is not there yet, but the demand is also not there yet. So this will be going step by step upwards in the next couple of years. And therefore, at some point of time, the technology will be ready to also have a low latency, but this will take a couple of years.
Good. Thank you very much. Carlo had also a question related to IoT.
Actually, I think it was basically a misunderstanding. I didn't understand very well how the ownership of the payments would end up. So
that's fine. Thank you very much, Carlo. But then Noyan Spander had this question that I will also speak for him, which says that why do we need a digital euro for IoT? Basically, going back to your previous reasoning, why do we need a digital euro for IoT? Isn't it preferable to have a currency that is not so centralized or that is not centralized at all?
Well, it could that could make sense from a normative perspective, but the key point is that at least for the next 5 years, all these devices and sensors, they are doing accounting, and accounting means that somebody needs to put all these transactions into an annual report, which is required by law. And the law requires companies, and therefore with it devices and sensors, to do such an annual report, and the annual report has to be done in euro. So therefore, accounting is the key reason why the euro is required for all these IoT devices. I would expect this to be at least like this for the next 3, 4, 5 years, right? Mm-hmm. Who knows that maybe in 10 years, there will be an entirely different currency, which is not the euro, but you need to have one joint accounting unit where all the receipts, all the invoices, all the inflows, outflows are being booked. And this needs to be stable, right? There is no perfectly decentralized stable coin out there which is large and shows high transaction throughput. DAI from MakerDAO is quite successful, but that's referencing the dollar, right? That's not a single stable coin. It's not existing yet.
Yes.
But maybe I'm wrong. Let me know.
I have the same impression. Good. I think that if there is no other question that perhaps was not written in the chat and you would like to ask now directly. Gerd, you want to have a question? No.
No, I want to come up and thank.
Yes, basically, I also want to thank Gerd. Also wants to thank you, Philippe, for the very nice, interesting presentation. And I really look forward to the time in which we can meet in person. That will be soon. But thank you for this very interesting talk and for all the insights that you brought.
Thanks for inviting me. Yeah, very nice.
It's a pleasure.
Okay.
Have a nice evening, guys.
Thank you very much.
Thank you.
Thank you very much.
Bye. Goodbye.
Bye-bye.
Goodbye.
Philippe.
Yes.
Ampleforth wäre noch spannend. Ich weiß nicht, ob du das kennst.
Ich komme halt, das weiß ich wie das, ich komme mit den neuen, this space is developing too dynamically, you know, I can't keep up with all these projects.
Yeah, I same here. I just thought how you explained cryptocurrency versus fiat currency. Ampleforth has tries to be stable and supply is elastic, which is not really working out now. But it's just an interesting experiment towards creating stable crypto.
Interesting. Okay, I will check this out. I have heard this name multiply, but but I don't know any details. Excellent.
Just sent you the link. Hey, thank you very much for your talk.
Okay,
it was
thank you.
Super interesting.
Happy to do so. Thanks. Have a nice evening.
Hey, you too.
Goodbye.
Bye-bye. Bye, guys.